G'day, Ziggy here, and welcome to episode 2 of my podcast, Plan to Prosper. Now, in these podcasts, we're going to have a variety of different topics, right? This topic today is a little bit heavier because we are going to talk about the financial planning industry, where it's come from, where things are at, and things that you need to be aware of, right? Because you need to understand when dealing with a financial planner, the questions to ask, right? We're going to go through the top 10 questions you should be asking a financial planner and what you should expect from a financial planner because, as we all know, in every industry, there are good ones, there are bad ones, and there are ones that want to be good but are not, are not good, they're bad. So there are financial planners and there are financial planners. But before we get going today, because this topic is a little bit heavier, I want to get into a joke. Right? We'll get into a joke. Now, this joke is about finance, right? But this is it. If you think no one cares about you, try missing a loan repayment. I hope you like that one. All right, more to come. More to come. All right, so in today's, as I said, we're talking about the industry today. Now, when it comes to the industry, what's happened in the financial planning industry is that, as you know, I'm an accountant and I was a tax agent and I dealt a lot with accounting and tax for many years. I was a CPA in my earlier years. And so we accountants in the late 80s in particular were too busy doing accounting and tax when financial planning begun. Now, financial planning begun really in earnest in the late 80s when the superannuation system began. And what was happening is Paul Keating, who was the treasurer at the time and ended up being the prime minister, made it mandatory for employers to make a contribution into super on behalf of their employees, which at the time it was 3% of their gross income, right? Today it's 11%. So it was 3%. Now what happened was, as I said, things were busy with accountants, and so the financial planning industry began with the insurance agents, right? Now the insurance agents at the time were selling, obviously, insurance products, and the way that they were commensurated, or the way that they were paid, was by way of commissions. And so the financial planning industry began that way as well. So because super became mandatory at the time, if you were self-employed and you made super contributions, you could claim it as a tax deduction. And so the insurance agents then started to make recommendations or to sell superannuation products on this basis, and so they received commissions as a result. I remember when I started a bookkeeping role, right? So I was still at university. I was in my third year. Now, third year at university was what they call a work year, okay? And so it was a 4-year course. The third year was your working year, and then you came back and completed the fourth year, which was your third year of university. And in my third year, I had a bookkeeping role for an insurance agent, and he was the biggest insurance agent for, at the time, Legal & General, which ended up being purchased by Colonial First State, which ended up being purchased by Commonwealth Bank. It was Legal & General at the time, and I remember when the insurance guys used to make recommendations of $3,000, because at the time, if you were self-employed, you could make a $3,000 contribution, claim it as 100% tax deduction. Anything above that, you were able to claim it at 75%. And so these insurance guys had a big database of doctors. And so they would go to the doctors and they would say, look, if you make this contribution of $3,000, you'll be able to claim it as a tax deduction. And doctors, being like a lot of people, the concept of a tax deduction is a great idea. And so they would make this $3,000 tax deduction into a fund at the time. Now, what happened was the insurance guy who was selling them the superannuation product would receive $2,000 of commission up front. Now, where did that $2,000 came out from? It came out from the $3,000. So all of a sudden, there's a $3,000 contribution being made, and there's only $1,000 being invested. And what would happen? I remember at the time, after a year or two, one of the doctor's clients called the office and he said, "Listen, no, I've just got a statement, and I invested $3,000, and now it's only worth $1,200." And I remember the boss at the time was saying, he said to the insurance advisor, he said, "Just tell him that's the impact of inflation." Like, how ridiculous, right? The impact of inflation. But there was strong commissions that were being paid at the time, and that continued for a very long time. And so whenever people would go see a financial planner, they weren't actually getting strategic advice. It was just advice on a particular product. And of course, the banks were doing financial planning. And so if you went to a bank to get financial planning advice, which product do you think you would end up with? It would be one of the bank's superannuation products. Now, was that product in your best interest? Maybe, maybe not. But there was no legal requirement to make recommendations of a product that was in your best interest. And so we had this scenario whereby 2017 there was a Royal Commission because during the GFC of 2008 things just blew up because financial planners had made recommendations, they had earned a lot of money, and then clients had lost a lot of money, right, as a result of GFC. So the proper risk profiles weren't taken into account, the proper risk returns weren't analysed for clients, so people just invested, trusting a financial planner, and unfortunately a lot of people lost money and things went sour. As a result, we had a Royal Commission, and the Royal Commission brought in these new laws and made substantial changes, and the aim was to make the financial planning industry, turn it into a profession, which it should have been done from the beginning, much like the accounting profession. And it is getting better because we're getting a lot more accountants that are now coming into the industry, and we're getting even some lawyers are coming into the industry as well, right? So be confident now in where the financial planning industry sits. There's a lot of things that, a lot of compliance, and in fact, some would argue there's just way too much, but there's a lot of compliance that's in place for you to feel confident. Now, we deal with clients, and it's funny because we get different clients that come across. I remember when I first started financial planning, it was early 2000s. I was doing lots of seminars at the time, and there was a seminar that I did to a group of engineers. Now, in the industry, it's well known that two sets of different types of clients that probably are a bit more analytical, right, are engineers and teachers. And they're not the type to make sort of quick decisions, or they tend to procrastinate a bit, tend to sit on things a little bit. Anyway, one of the people that attended the seminar actually came in to see me, and he was an engineer. And the minute that he walked into the office, so he comes into the office, he sat down, and I had a pen. I had a pen that I was writing with, and I think the pen was from Colonial First State at the time, because at the time all the fund managers would give you pens and books and that sort of thing. That's all gone, right? They can't do that anymore, so that's all gone. So if you see me with a pen, it's an old pen. Anyway, so I had this Colonial First State pen, and he sits down and he says, "I know about you financial planners." I said, "What do you mean?" He goes, "I know all about you." He said, "You guys just sell product, you guys just earn commissions, and look, you've even got a pen from Colonial First State." Now, he was right about the first two things, right? It was commission focused. There were a lot of financial planners that weren't doing the right thing. I like to think I was, but I had this pen and I got a little bit annoyed. I got a little bit miffed. And I said to him, "Actually, you're right. It is a Colonial First State pen." I said, "Do you want the pen?" He said, No, don't want the pen. But I want to let you know that I've been to the library and I've read every single, because there was very little internet at the time, that I've read every single financial planning book in the library. I said, "Okay." So my first question, I didn't actually ask him, but I was thinking, "Well, what are you doing here?" He said, "I know all about the power of investing and the power of investing and to continue to invest." And I said, "Well, that's fantastic." So in the end, he didn't end up doing anything because, in fact, he had so much knowledge that he had armed himself with and had such a negative impact on the industry that, unfortunately, he didn't progress. Now, hopefully, he's doing well for himself today. I wished him all the best. We left it aside. He didn't take the pen, right? I think I gave it to him, but he didn't take the pen. Anyway, I kept the pen, so I do have a Colonial First State pen somewhere around. What I'm getting at is that the industry has changed, and therefore when you are looking to now deal with the industry, have confidence when you're dealing with the industry because, and it was way overdue, but from 2017, I remember when I came into the industry, when I did accounting and tax, when I was at university, when I did my CPA, it was ingrained into us, right, that we needed to act with honesty and integrity and in the best interest of the client. Unfortunately, I came into financial planning and that wasn't the case. What was the criteria? The criteria was that you had to make recommendations that were appropriate for the client. Now, I may make recommendations for, say, I might consider 5 different products for you. One of those products is in your best interest. But if the criteria was to make recommendations that are appropriate, all those 5 would have been appropriate for you, but one was in your best interest. Now, if another one was in the advisor's best interest, guess which one you were going to get? So, unfortunately, that used to happen. That's all changed. And now there are actually 12 new standards that have been put into law. One of the standards is you must act with honesty and integrity and in the best interest of the client. And we need to show as planners in a financial plan to actually show that, the recommendations, how are these recommendations in your best interest and what else was considered? Why are these recommendations being made in light of your risk profile and your own personal circumstances? So, providing that context of around the industry, and I can say it's a bit sort of bland, but you do need to know this and have an understanding. So now when you step out and someone says to you, why don't you go and see a financial planner? Right, I was just talking to a friend this morning, and he was telling me as well that he said, I've got some friends I was talking to over the weekend, and they had some questions of me, and I said to them, why don't you go see a financial planner? And they hadn't, right? So I want to encourage you, as you step out, to get financial advice, because when you have all these questions around, do I pay more off my home loan? Do I invest? I want to buy an investment property. How do I do that? What does that look like? That all should be done in a strategic plan, which brings me to this next important point of what you should be expecting, what you should be getting from a financial planner. As we said, there are financial planners and there are financial planners. So there's a document that, I don't have one there, but there's a document that you should be getting from every financial planner when you see them. That's called a financial services guide. That will tell you everything about the financial planner that you need to know so that you can decide whether you engage the financial planner and to start working with them. So what that covers is that covers their background, their qualifications, their experience, and what areas they're licensed to give advice in. So there are financial planners that simply do life insurance, right? There are financial planners that maybe do life insurance and some superannuation. And there are financial planners that are a lot more strategic, that can take into account all your circumstances and give you advice in the structuring of, or whether an investment property from a financial perspective is best for you. Remember, financial planners are not property experts, so they can't give you any recommendation whether that property is best or not for you, but they can give you a recommendation to say whether purchasing this investment property financially is what's best for you, or maybe it's not. So a financial services guide will tell you all that. So that document must be given to you. It also tells you things like how they charge, how they earn their fees, what other charges there might be, what you should expect in dealing with a financial planner. And one of the things you should expect is that you'll receive we call it financial plan, but if it's the technical term is a statement of advice. Now that statement of advice could be one of 2 types. One statement of advice could be a very holistic one, which is what I tend to do, which is a financial plan. It takes everything into account, your loans, your cash flow, your property, your superannuation, your insurance, your estate planning. So it takes everything into account. So that's a statement of advice that is strategic and it's advice focused. Or there's also then a statement of advice in relation to a particular product. So let's say we do the financial plan or the largest statement of advice, and there's a recommendation there after the analysis is done to say, you know what, there is a better super fund for you, maybe a better insurance product. Then there's a statement of advice for a separate product, right? And that statement of advice is going to be around the particular superannuation fund that might be recommended or the particular insurance product. Now, that statement of advice that's specific around that product is going to tell you everything that you need to know about that product. Okay, the pros, the cons, the risks, anything you need to know. What also must come with that product is what's called a product disclosure statement, which is actually what's provided by either super fund or by the insurance company, or whatever other product you may be investing in. And that product disclosure statement is when the super funds or these guys are preparing these products, they're lodged with the Australian Securities and Investment Commission, which is the governing body, and so they're ticked off at that end. But that's an important document because it goes into detail about that particular product. But the aim is that the statement of advice that's prepared for you summarises the pros, the cons, the costs, the comparisons with any particular other products, and also the benefits of that particular product and how it's in your best interest to move to this product if that's the recommendation. So sometimes when we do the analysis, the initial analysis, we find that the superannuation fund or the insurance product that the client is with, they should remain with it, right? Because we've assessed it, and sometimes the one that they've got is the best one. It could be the cheapest, whatever the case. But there are other times where it's not, and super funds, haven't been reviewed. Insurances is a big one where clients they don't get their insurances reviewed, and therefore they end up with older, more expensive type products. And so these things need to be reviewed. So that's all in what we call a statement of advice. All right, and it's very important that you know what you're getting in a statement of advice. Now, it will tell you in the financial services guide, as I said, with the advisor and how much they charge, and also what you should expect from the advisor, and then what their fees are from an ongoing perspective. A few other things that the financial services guide has is things like the privacy statement, what is the process in dealing with complaints, how are you protected? Does the advisor have cyber insurance? Do they have professional indemnity insurance? All these things need to be in place. Now, the other thing that you can do is you can go onto ASIC's website, which is not a fun thing to do. It's a pretty boring website, but there's lots of good information. And you can do a search on there and type in the financial planner's name, and it'll come up with everything about them. It'll come up with what areas they're licensed to give advice in, and also whether there has been any action against them or have they been in any trouble in the past, right? And that will help you to decide. Now, the other thing I want to cover is in the book, Money Does Grow on Trees, which I wrote years ago, there are 10 questions that, in my view, I think you should be asking every financial planner that you come across. First one is, what experience do you have? Now, naturally, you want someone that has a good experience. You wouldn't expect if you're going to have a knee operation, you wouldn't expect a junior to be, doing the operation. You want someone who's had good experience and who has dealt with many clients in the past, has been in the industry, and has dealt with different products in the past. So it is important that you deal with someone who has lots of experience. What are your qualifications is the second question. What are your qualifications? So what's your background? Are you actually qualified? Now, this is the one other major change as a result of the Royal Commission was previously when I entered the financial planning industry, you could do 2 weeks at one of the major institutions without any prior experience, and you were called a financial planner. How scary is that, or was that, right? These days it's different. These days every financial planner must now have a degree within the next few years, okay? But there are minimum requirements now in terms of qualifications. But you should be asking, do they have an accounting and tax background? Maybe they don't. And that's okay. They don't need to have an accounting and tax background, but as long as they have the minimum qualifications when it comes to financial planning. Another important one is who is your dealer group? Now, let me explain a little bit about the licensing arrangements, because what happens is as financial planners, we are licensed through what's called a dealer group, and we become what's called authorised representatives. But it's the dealer group that we have the licence through. It's the dealer group that holds what's called an Australian Financial Services Licence, right, an AFSL. It's the Australian Financial Services Licence that is held via the governing authority, which is the Australian Securities and Investment Commission. And so it's the ASIC, which is the acronym, oversees everyone that holds an Australian financial services license. So you need to know, and they need to disclose on the Financial Services Guide who they are licensed through. Now at 3P, as an advisor, I'm licensed through we have our own Australian Financial Services license, and we got that in 2007 because I didn't want us to have to be licensed through either a larger institution that would try and have an influence over where our clients invested or what our clients did. So we have autonomy in that respect, and we're not aligned with any institution. But you need to know who the dealer group, what we call the dealer group, is. What services does the advisor offer? What services do when I'm using the word advisor or planner, they're interchanging, right? But the legal word is financial planner. What services do they offer? So as I said before, you might have a financial planner that just offers life insurance, right? They're called a financial planner. Maybe they do life insurance and superannuation. They're still called a financial planner. Maybe like me, they're more holistic and offer a wider variety of services, but you need to know that, and that will be in their Financial Services Guide, right? But ask that question, get to know what their credentials are, what services they offer, and things that like their experience and so forth. Okay, so that's important. Ask also what type of clients they have, right? Do they look at clients that are only in a specific industry? Do they look after only medical clients, engineering clients? Do they have a particular niche? Majority of our clients are busy professionals, usually couples, usually between 40 and 55 years old, might have a mortgage, have kids, maybe have an investment property, usually have a loan, and want to know, how do we achieve our goals and objectives between now and the next 15 or 20 years? Okay, but ask what clients do they have? Do they have a broad set, or are they mixed? Question 5: What type of clients? Sorry, I covered that, didn't I? What type of clients do you have? Question 6: Will you be the only person working with me? So every financial planner needs to have a team, right? Because there's administration, there's compliance, there's certain things that need to be done. But when you speak to that financial planner, is it that financial planner that's going to be giving you the advice? Or is it another financial planner who's maybe more junior? Now, if you are having an operation on you want to know that you've got someone senior and someone doing it properly. So my view is that you want to be dealing with someone that is a bit more senior. However, I think it's good for that senior person. I have a great team, okay? And I have the team that provides different functions, but I oversee all the advice that's provided to a client. But it's important to know who you're dealing with, obviously the team that they have, so you're aware. All right, how will I pay for your services? Another question, number 7. How will I pay for your services? So will I pay for your services? Will you just earn a commission from somewhere? Do I pay your services as a result of a direct fee? Do I pay for a financial plan up front? Do I pay for a financial plan and then there's implementation fee in addition to that original financial plan, right? Every financial planner is different. But just know that from a financial planning perspective, when you get advice, it is and should be a fee for service. Okay? There are still commissions being paid to advisors in the insurance industry, and it's one of those things that the government just didn't want it. It was a bit too hard to tackle from a commissions perspective, so they've left it as it is. And so rather than have a fee for service, I mean, at the end of the day, if you're needing income protection or life insurance, no one wants to pay extra money to insurance companies. So imagine having to pay a fee to the financial planner to get advice and then having to pay premiums to the insurance company. So what they've done, in my view, which is a great idea, is they haven't completely dealt with it properly, but what they've said is the commissions are going to be flat across the board, regardless of which insurance company you go with. So at least there's no temptation from the planner to put you towards one insurance company or the other. But how are they going to? It's important for you to know how you will pay for their services and what the arrangement is. Question 8, how much do you typically charge? Obviously, that's going to be in the financial services guide. You want to know what are the total fees I'm going to pay, and you don't want any surprises to come out in the end. You don't want the financial planner coming out and saying, oh, you know what, I did quote you $5,000 to do a financial plan, but there was extra work that we didn't quite cover, or, we're not going to charge anyone anything extra unless we speak to you first. But even then, when we quote for a financial plan, it is what it is, right? We've factored it in. No surprises. I don't like surprises, so I don't think clients like surprises either. Question 9, could anyone besides me benefit from your recommendations? Right? So the thing is here, what I'm getting at this question is that when you see a financial planner, say, okay, are you going to benefit in any way by making certain recommendations? Now, where there's any benefit that's received by a financial planner that is over $300, that needs to be disclosed. As a result, really, there's no fund managers, there's no insurance companies that pay any benefits or offer any benefits anyway, right? So as a result, that's gone. But are there any other benefits that is important to know just in case there is anything? Question 10, the last one. Have you ever been publicly disciplined for any unlawful or any unethical actions in your professional career? Now, in hindsight, as I'm reading this, that probably should be question 1. Because if the answer to that is yes, there's no point going on to other questions. Duh. But anyway, okay, question to ask. Maybe when you're asking those questions, maybe you make that number 1. Have you ever been publicly disciplined? Now, all this information will be available on ASIC's website, Australian Securities and Investment Commission. But it is important to know, ask the question, have you ever been in trouble? Have you ever done anything wrong? Have you ever been disciplined for any reason? The longer I read that, that's more funnier. That should be question 1. All right, so they're the 10 questions that I think every financial planner should be asked, that you should be asking every financial planner. So what I've covered is given you a bit of an insight into the industry, into where things are now. And what's happening going forward is that there are 2 things that are happening. One is, as a result of these new compliance measures, there's additional professional requirements and qualifications for financial planners. The industry has lost about 10,000 financial planners in the last 5 years, which means that there are a lot less financial planners in the industry, but the demand is ever increasing to get advice. Okay, so what's happening is that we have lost good financial planners in the industry because there's been a lot of the ones that were sort of closer to the retirement, and they were told by the regulators, well, now you've got to get a degree. They might not have had one. They've had all the experience, didn't have a degree, and they've said, you know what, I'm going to take early retirement. Why would I try and go to university for another 3 or 4 years? I haven't done that for years, et cetera, et cetera. So we've lost people in the industry, but rest assured that there are still good financial planners in the industry. It's a good industry, and it's very robust when it comes to its compliance and its overseeing of financial planners. In fact, the compliance has gone way, in my view, what tends to happen is the pendulum swings in anything, particularly when it comes to government, right? If there's not a lot of compliance in front and it hits the fan, they then over-regulate, and we're slowly starting to see that sort of come back into some balance, which is reasonable. So that's the industry. That's what's happening. The questions to ask, be encouraged, and in all things that you're doing with a financial planner, make sure you ask lots of questions. I think it's always good to ask lots of questions in everything. I love this segment, which is about asking questions and hopefully debunking some myths as well. One of the questions or comments that I get a lot is, I don't need to see a financial planner because I don't have any money. Maybe that's why you don't have any money. Now, that's not true. Absolutely not true. Because if you don't have any money to invest, that doesn't matter. Do you have a home? Do you have a loan? Do you have a super fund? Do you have insurance? If you have any one of those, you do need to see a financial planner, in my view. Now, it's likely that you at least have a super fund, right? Particularly if you're employed. You have a super fund because the employer is making contributions. And a super fund is something that is, you might say that you're young. You might say that, oh, don't worry about it. I'm not going to see that for another 30 years. Wrong, because that is your money. The only difference is you don't have access to it. So it's very important that you get proper advice when it comes to a financial planner, when it comes to a super fund, for example. And we'll cover this in one of the other episodes, but a super fund, when we're assessing a super fund for a client, there are three things that we look at. One is we look at how the money is invested, right? How the money's invested. So the money's invested, you actually end up deciding how the money's invested. So we need to look at how the money's invested. If it's too conservative, then it's not going to be getting the long-term returns that you need. We also look at the fees that have been charged. Now, every platform, fund manager charges fees a little bit differently. So what we need to work at is what are the total fees that have been charged, put that into a dollar value, and then take that dollar value and express that as a percentage of the amount of money that you have in super. Because that tells us how is your super fund compared to others. The third thing that we look at are the returns. Naturally, you want to know that your super fund is returning a decent amount of money. Now, these days, you can go onto ASIC's website, you can go onto the government's website, and it does give you a certain level of comparisons with other super funds. But it doesn't compare every single super fund, right? So just keep that in mind. So it's not true that you don't need to see a financial planner just because you don't have some money to invest. Obviously, you should be seeing a financial planner when you have some money to invest, but still there's so many other areas in your finances that are really probably just inefficient. And we need to make sure that everything, when it comes to your finances, is efficient and effective as possible, because we want your money working as hard as you do. Thanks for joining me on episode 2 of my podcast, Plan to Prosper. We've talked about the industry. Yes, it has been a little bit heavy, but hey, we don't need to go there again because this is recorded, and so you'll be able to refer back to it any time. But we got plenty of great stuff coming on future podcasts. So until next time, we'll see you real soon.